Let's get more on the stock movers on Bay Street. We are joined by Bloomberg Equities reporter Stephanie Hughes. Stephanie, great to see you. We haven't talked for a while. Fill us in on Aritzia. What a rally we saw in those shares.
Oh, for sure, Andy, and happy Friday. Good to see you again. Yeah, Aritzia shares gained as much as 16%. Now, that gain there brought the share price back to its highest level since March, and it was by far the best performer on the TSX for pretty much the entire trading day today. Analysts are characterizing it as a blowout quarter for the clothing retailer, given that adjusted earnings of 83 cents per share came, far ahead of what analysts were expecting. Not only that, but net revenue clocked in at $895 million, once again exceeding analysts' expectations. On top of that, the company now expects revenue to range between 620 and 640 million for the first quarter. Once again, you guessed it, beating analyst estimates. So the analysts called the guidance somewhat conservative given the uncertain spending environment and just everything we're dealing with the tariff concerns there, but it's positive nonetheless. The CEO, Jennifer Wong, said that the recent macroeconomic uncertainty, the tariffs, and the health around consumer spending do pose unique challenges to Aritzia and the wider industry. But she said that the strength of the company's brand has never been greater. So far, it seems like the retail therapy economy is still in full swing, Andy.
The retail therapy economy. I like that. What about Magna? We know there was more, another blow for the Canadian auto sector today with GM cutting back in Oshawa, Ontario.
Yeah, and I think some of that lapped over onto Magna, and there's also the matter of its earnings. So Magna shares fell by over 5% today. That was its biggest drop in about 3 weeks there. The automaker's adjusted earnings of 78 cents per share fell short of what analysts were expecting, but it should be said that the company did boost its earnings guidance, now expecting sales to range between 40 billion and close to 42 billion, which was higher than what analysts were putting in their estimates there. Some analysts picked up on the positives, like the boosted guide, the valuation, and more clarity on tariff policy as Magna works to be more USMCA compliant. But it seems like investors are kind of focused on the negatives. Magna did say it would pass on most of it, or pretty much all of its tariff costs to the consumer. And in general, in a nutshell, analysts are characterizing it as a mixed quarter. So like I said, despite some of the positives here, investors seem to be focusing on that earnings miss and, like you mentioned, some of the scary headlines around the auto sector, Andy.
Thank you very much indeed, Stephanie. Really appreciate it. Stephanie, Bloomberg's Stephanie Hughes joining us there.